So this is Noshi. I'm a full-time stocks and option trader. I've been trading for the last 12 years, and I have a lot of services I provide, which is on my website. There is a new website called Trade Genie, My Trade Genie. So I'm transferring myself from financial markets to My Trade Genie. So this presentation, which you see the slide, they are all slides, but this website is still valid. It's running. So, but there I have another website called My Trade Genie, and it lists all the services. I have about 8, 9 services, and then I have a coaching services. So that coaching is not listed there. It's by invitation. So if you're interested, just send me email. Anyway, so mytradegenie.com. So today, what I did, I prepared, as usual, I prepared charts for to show you. Some are the just last week's trades we took, and some are for the next week, and some are just the setup. So I just want to describe you the setup, but the setup itself is not is just one component of making money. So there's more to trading than just finding the setup. So traders don't understand that. They're just looking for the setups, and that's not what trading is. Trading is more than setup. So setup is just one part. So what I'm telling you, teaching you, is just one part of the overall trading. It's just little component. So I'll show you the types of trading. It's just theoretical knowledge, types of trading, and with the emphasis on swing trading, because I'm a swing trader and a position trader. So I don't do day trading or scalping. So emphasis on swing trading. And I'll show you some techniques which I do, but I won't go into discussion because it will take time. So I'll leave it for some other time, maybe next week. So today I'll show you some slides, and then I'll show you the charts, and then we can show you the charts of the markets. So we know that trading is the hardest way to make easy dollar. So it's very hard to make money in trading if you don't know what you're doing. It takes at least 10,000 to 20,000 hours of live market experience to really understand what the market is doing and what you are supposed to do. But most of the time, the traders just don't understand this, and they just jump in with the $5,000 or $10,000, because the barrier to entry is there is nothing. So this is a big game designed by the big boys for the little guys to lose money and give them the money every year. So big boys have designed this game for all the little boys to give the money to the big boys. So, so you need to know the rules of the game. So if you don't know the rules of the game, then everything you do is a mistake. So first of all, you need to understand the rules of the game and what kind of game you're playing and what kind of a player you are. So barrier, they made the barrier to entry as zero. There is nothing. You can just anyone 18 year older can borrow money, 2,000, 5,000, and then open an account and jump in and then lose and then go and borrow more money. So I did it long time ago with $2,000, and I lost it in 1 month. Then I opened another account with $10,000, and I lost that one too. But then I realized that I'm doing something wrong. So trading is the hardest way to make easy dollar. I see some members like Terry. I see Terry. Hi, Terry. He knows me for a long time. So Terry is here. So welcome, Terry. Trading is the hardest way to make easy dollar. Now, fortune, there's a fortune there. There's a very easy money. If you know how to trade, there's literally you can print money every day, but you need to know the rules of the game and master and devote time, just like the CPAs, the doctors, the engineers, God knows, or the pilots, they invest time. So you need to invest time. And Bruce Lee said that I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So we need to practice one kick 10,000 times. All it takes is master one technique, and just turn on your computer, look for that setup, and it's there, it's there. If it's not there, there's nothing there, and you don't force yourself to find something through other setup, and you just turn off the computer and leave. So that's what I do. I have done a few techniques, but there are few main, like couple of techniques which are main techniques, and then there are others, 4 or 5 of them. So if another thing is, if the stocks are appearing based on your setup, then it means that there is something going on and you need to trade. If there's nothing there, then it means there's nothing there to trade. So you just close the computer, manage your trade, open trade, and close, and then leave, do something else. So the key is to fortune is mastering these few techniques. Don't jump around. And people are slave to trading. I'm a part of a group. These guys are slave. Like there are 40, 50 guys. They are slave. And by the meaning by being a slave is that they are on Facebook Messenger and they just type in the messenger doing what the market will do tomorrow, and I believe QQQ will do this and SPY will do this, and what's your thought about this, and what the Powell will say, or what the Donald Trump will say tomorrow, or what the Chinese president will say. So all that is full of crap. What market will do, what the market will do. If you're glued to the computer 24 hours and just chatting away, you have to really look at your life. So I don't do like that. I've cut down my trading. I used to do spend time from like 5 to 1 o'clock. So I do wake up at 4 in the morning Pacific time. I prepare myself. I prepared last night and I prepare myself, and then first 2 3 hours is important, and then I set up the trades and then leave. So do other thing. I'm just in my office, but doing some other thing. I'm not glued, and I make the same money what other guys are making. Probably losing day trading and scalping and glued to the computer, reading all kinds of articles, going to the TV, going to the Facebook. That's it's not working. It doesn't work. Fortune is made by mastering few techniques. Just master a few techniques and that's it. And execute those techniques which are producing you the faster return. So you need to understand which techniques are producing you the faster return. There are some techniques which you give you return, but they are slow. So the compounding effect, if you understand the compounding effect should take place because your techniques produces fast return. So your money is constantly working. So that's the thing. The money need to work constantly at a faster rate. So if I make 3% in 2 days, it's better than I make 5% in 1 week. So there are many techniques I use and the strategies. So this is just one of the few strategies which I teach, and I teach this for free, not completely, but in a free sessions I teach. So today I'm not going to go over there because of the time restrictions. I've prepared charts, but I'm just mentioning it. And if you are interested, you must have heard me before if you attended the previous webinar. But if you like to attend, then next session or after the next session I'll cover more. So these are the good techniques for me. A breakout strategy, breakout reversal strategy. So breakout strategy means that the stock is breaking out of some consolidation or some resistance. Breakout reversal is the stock falls to some support level and then reverses to the upside or to the downside, whatever the strategy I'm looking at. Gap up strategy, the stock gaps. There are many stocks which gap up, but where they gap up, how they gap up, what they are doing after the gap up, is are they above the resistance level, below resistance level, and a pullback level. So all that goes into play. The gap down strategy, so same thing, gap down markets. A lot of stocks gap down every day. So where they gap down is they gap down at some important moving averages, some support level, what they are doing, what's the news. Is the gap down just that move is over on a one gap down and the move is over? Now the stock will not fall further. So all that goes into evaluating gap of reversal. So the stock gap up and then they reverse. So what kind of a news triggered the gap? Where the stock gaps up? Is it did it gap above the resistance, below the resistance? How far it gapped up? So all that goes into in understanding and taking the trade. Gap down reversal, which is my favorite. So a lot of stock they just gap down and then they just reverse it. So I'll give you one example of EA trade I did. So it gapped down, but and then it moved next day. So some stocks they just gap down and then reverse the same day. So when they reverse, they're reversing because The people who sold, they think the stock is having a bad news, so they sell and it gaps down. But there are others who think that now the stock is at the better price, so they buy and they buy, and then the stock hits some resistance, and then it stops. If there's no more buying, then it just stops there, and then it does its sideways move for many days. So again, you need to be quick on a gap down reversal where what the stock is doing and where it can stop. Some stocks they just gap down and reverse and just keep going up. And then at the end, opening range breakout strategy. So there are 8,100 stocks in New York Stock Exchange. So how many you can trade? So I have 400 and right now 37 stocks in my database which I trade. So I don't look at the 4,438 stock, whatever it is. If I find something, then I add one stock, and then I remove something if it's not. I see this as not moving or it has gone down in value, etc. Bought out or merge or whatever, it bankrupt. So that goes away from the list, and the new one is added if I find something. Otherwise, I have 437. So in the morning, 437 stocks are moving. So how do I track them? So which one is moving up, which one is moving down? So it depends on what the market is doing. So before, like I already done my market analysis on the market. So I know that I am focused only towards the bullish side. So my focus is on the bullish side till the market gives me the clue that the market is weak and it can fall. So if I know that my strategy should be on the bullish side, a market going up, then I just focus on the stock which are moving up. So I don't care about the stock which are going down because the odds are not in my favor. So I put that odd in my favor. So let's say the market is bullish. So then I'm only looking for the bullish stocks. And then there are 8,000 stocks which are not in my database, only in my database 437. So out of 437, which one I need to look at? So I have a filter. So in the first 5 minutes, there's nothing happening on my screen. I'm only watching so I'm explaining a little more in detail the opening range breakout strategy. So I'm watching my open position. So first 5 minutes, I'm just watching my open positions just in case some stocks are hitting my target and market is okay, etc. And then because I'm running services, so my members are sending me emails, so I'm tracking that. I have an assistant who is looking at something. I'm talking to him. So all that goes on for 5 minutes. So there's nothing I look during the first 5 minutes. Then I have a window which shows those stocks which appear after 5 minutes. So they are still moving up. So 5 minutes are gone and they are still moving up. They have made a new high above the 5 minute. So they appear. So it's like out of nowhere, I can see the light at the end of the tunnel. It's like that. So the few stocks, they just appear. So when they appear, I say, okay, these are the stocks which are appearing. I look at their volume and then I do the sorting. So based on the volume, I do the sorting. Sometimes I do the sorting based on the dollar amount move. Sometimes I do the sorting based on the percentage change. And sometimes I do the sorting just based on when they are appearing. They are new or a little late. So some appearing at 6 minute intervals, some appearing at 7 minute intervals. So I do all that and I'm checking the chart. Then I have another window for 15 minutes. So these stocks are moving, and I'm making a list, sorting it, making a list, checking the earnings, checking the options, checking any news, checking the charts, and then 15 minutes. So 15-minute window is still blank because 15 minutes has not passed. So after 15 minutes, as soon as 15 minutes over, some of those stocks they just appear on a 15-minute window. So then I know that okay, these are the stocks which are still moving. So I pay attention, and if I have to take the trade, I take the trade. Otherwise, there is another 30-minute window. So some stocks will just appear after 30 minutes. And if the market is bullish and going up, then a lot of stocks will appear on the 30-minute window. And someday there is nothing there because then it tells me clearly that the first move was just move up, and then now all the stocks are trading below the high made 30 minutes. So if 35 minutes have gone and there's not a single stock appearing on my window, then I know the market condition already by the stocks. So it's easy to look at those stocks based on market condition just by looking at the my 437 stocks. And then later, suppose this 2 hours gone by, and then the stock starts appearing. So it means the market is getting some momentum, and the stocks start appearing. So those stocks I take a look. So this is opening range breakout strategy, which goes hand in hand with the gap up or gap down strategy and other strategies. So this opening range, I just use it on top of those above. So now there are types of trading. So there are many kinds of trading. Like there are 5 of them right now. So I am a swing trader. So I trade swing. So and then I have a position trading, and the long-term trading is for my retirement account. So swing trading and position trading. Swing trading I do for options, and the position trading I do for stocks. So it's and the scalp trading is you scalp, make pennies, 5 cents, 10 cents, and then you sell, then you buy, and then you just go crazy and 5 cents, 10 cents. Maybe you make money. I don't. It's very hard, so I don't do that. Day trading, you buy a stock and then you close it the same day. So your stop is tight, your position is big, and I can do that day trading. But I don't because of I have other responsibilities, so I cannot do day trading. So I focus on swing trading and position trading. And swing trading I do for options. Some of the position trading turns into swing trading for stocks if the conditions change. So otherwise, I just manage my trades based on position trading, which is for a few weeks, and swing trading is 1 to 7 days. So the beauty of swing trading is that, and I like it because it's a combination of 2 concepts. So you can buy the stocks. So just like you invest, you can buy the stocks, but it has a quicker pace. So it's in between the long term and the day trading. So it's not a day trading because it turns into day trading when the position hits the target. For instance, you bought something and then it moves so much aggressively that you inclined to take a profit. So it turns into day trading, but it's okay. uh, that's good. But if not, then it's in between investing and day trading. So it's a combination of 2 concepts. And then what happened? What is the objective? So objective is to maximize profit in short period of time. So what you do is you're buying, you're looking for some retracement. Let's say, just give you an example. You're looking for some retracement of the stock at certain level. It could be a Fibonacci level. It could be something else. So you're looking for retracement, and then you see that the stock has found the support, and now it's moving up. So there's and some other whatever analysis or indicators you use, and then you time it, and then you enter the trade. So anywhere from 1 to 3 days to 5 days, maximum 7 days. So you do that, and then you find something else to buy, and you have stop there wherever it's your stop. It could be the previous day low or 3 day low or whatever, or the support uh, break. So whatever is your stop setup, which is very important. So you know your risk, and then you're looking for 3 to 5 days of move. If 3 consecutive days the stock moves, good, you take your profit. If not, then it can take 5 days for the stock to move, ideally. So, and then you buy, sell, and then you go for something else. And you can spread your portfolio into various positions. So, 4, 5, 6 positions, and one you're closing, then you're adding another one. So that's swing trading. So swing trading with the stock trading and option trading, but both are swing. So in the swing trading, the objective is 3 to 7% move. So you're looking for the quick move. So minimum 3% move, and it the stock can move to 7%, and you close the trade because you expect the stock will pull back. Otherwise, the swing trading will become position trading. If you keep holding it, if you want to bear the pullback, the retracement, and then you're looking for another move, so then it will become position trading. So it depends what's your objective. So you have to define your objective who you are, based on who you are. So you have to first know who you are, because I am I, you are you, and we two are both different people, different age, different objective, financial objectives. So based on the financial objective, then you have to have the same kind of account. You don't mix stock trading with option trading, and don't mix swing with position, and then you're trading futures also in that account, or forex also, and you're mixing it. It's not supposed to be. So if, based on your objective, who you are, based on your capital return and the downside risk, so you have to define all that. Then you open an account and then you trade. So stock trading is 3% to 7%. Option, if you combine this, if you're trading on the same stock, if you're trading option and your timing is right, that 3% to 7% move can give you 40 to 100% return. So it can be like that. So it's a big return, but you have to remember the stock. So option is a risky venture. So option was first designed for hedging purposes, and then the traders started speculating. So option is a speculative vehicle. So you can make 40%, 100%, and you can lose 100%. That is fast. You can lose all, and 50% is like normal, for option trading. So you need a higher, either you're making big gains and a small loss, or you have to have a higher win percentage. So you have to, your system is, if you know your system, what is doing, is it giving you a big percentage gain, then you can have a lower win ratio. So if you make 200, 300% and lose, suppose 70, 80%, then you can say, okay, if I'm right 40% of the time, I'm still making money. My system is still making money. But if you're not right 40%, if your gains are smaller, then you have to be right at like 80% to compensate for the loss. So you have to be, your system should generate more winners than the loser. So you have to find the balance. So you have to implement other strategies, how to manage the money and the risk management. So swing trader tools. Now, different traders, different tools. So for swing trading, I don't use any indicator. I don't need any perfect indicator. So on my screen, if you look at my charts or screens, there are no indicators. It used to be, I used to use MACD and ADX and RSI and stochastics. So all that I used in the beginning, moving averages. So my mentor, or my coach, when I met them online in Yahoo group, when I started, they taught me. But then slowly, I started deviating away from those indicators, and I don't use any indicator. So just pure price and the patterns. So for swing trader tools, for me, no need for perfect indicators. So I don't need any perfect indicator, because the indicators are made from price or volume. So if you can watch price and volume as a pure indicators, then that's your indicator for price and volume. And second thing is, you need to identify the proven pattern. So again, the Bruce Lee comes into play. So you need to be like a Bruce Lee. So you know that, okay, this is what I have seen before, and this is the way the stock behave when it. So I'm stalking it. So that's my first step. So I stalk, and I'm looking for the stock to do certain thing. So when it starts doing that thing, then I know, okay, it looks like that it will do the same thing which it did. Another stock did just like that, and it sounds familiar. So that bell goes off. That it sounds familiar. The stock will do that. Then I have to create an image in my brain, and I say, okay, so this stock is doing this right now, and previously I know I have so many stock example in my brain, and the stock has done that. So you need to match this pattern with your previous stored pattern in your brain. So you would go through, matching, and then you create a internal map in your brain, and then you say, okay, so if I am right, the stock will do this based on this, and this is where the stock is going. Then I switch into the lower. uh, time frame for the entry. And when I feel good, so I have to really feel good about it, that okay, I'm feeling good, I'm in a confidence state, and I've been patient for last half hour, 1 hour, or 15 minutes. So I've been patient, now I'm confident, I have seen, it sounds familiar, it looks like it's going there. This is the map, it will map there. This is where's my stop, where I could be wrong, how much I'm going to lose, what's my objective, what the market is telling me, how many positions I have open, how much buying power I have, what is my mental state right now, am I under stress, am I going on vacation? So all that goes into play, and then I take the trade or ignore it. So once I take the trade, then I just then it goes on autopilot on management. Exit strategies goes into play, right? So you can execute same techniques daily. Just open the computer, look for those stock which are fitting your techniques, and then you execute it. And you have to use your judgment. So it's only you there, and you have to decide to take the trade or not to take the trade based on your skills and expertise. So you have to develop your expertise and your skills, and then use your judgment. And you should be able to be flexible. So the mechanical traders, they are not flexible because mechanical traders have programmed everything. So based on the previous their research, they program everything, and if the stock appears, it appears, if it doesn't appear, it doesn't appear. So they are auto trading. But being a rule based discretionary trader, so there are traders who are rule based discretion trader, and there are traders who are discretionary trader. They just take the trade based on someone telling them on CNBC or Facebook, and any hot stock tips. And the rule base is they have defined the rules, match this criteria, okay, boom, I take the trade. And I'm willing to be flexible. So if certain criteria doesn't match perfectly, then I'm still willing to bend my rules a little bit and take the trade, because there are other criteria which are matching heavily. So I am supposed to be flexible. And at the same time, I'm understanding the broader markets and indices. So at any given time, like any given time, any 30-second moment, you need to know, you need to understand what the market is doing. At least on a daily basis after the close. So when the market close, you have to understand what the markets have done, what the markets are doing, what do you expect tomorrow. And then when you wake up in the morning and then you see the market, then you say, okay, so either your understanding of the market was right overnight, or it changed because of certain thing, and all hell is breaking loose. So now the bullets are flying, everything is looking hazy, and you need to take care of your open position, worry about opening new positions later. So all that goes into play, and all this is you stack your probability in your favor, and then you execute the trades and do the trading. So the uniqueness of the swing trading. So what is good about swing trading is that you need to take the trade, or most of the time, before the crowd notice. So the setup is there, and you executing it, and then the move comes. So that move comes in 3-4 days, and you lock your gains. So you are not late in entry. And fortune is made via singles, not home runs. So you're looking for singles. So if you are trading stocks, looking for 3 to 7% return, you're not looking for 20, 25, or more than that in a stock. And you're not looking for 200% return on your option. You're just looking for 40, 60%, 40, 60%. And then once in a while, you get 200%, sometimes even 1000%. So that's good. Something happens. Microsoft bought LinkedIn, goes up. Okay, you made fortune. Otherwise, you're just looking for singles. And if you hit home run, then it can take care of several losses. And your equity should be rising at 45-degree angle, not at 90-degree angle. If it's rising at 90-degree angle, then you are, what do I say? I cannot say God. You are just, you're the holy man, and you have a holy grail. Otherwise, or you were lucky. So 90-degree angle is not good, because if your portfolio goes a 90-degree angle, it will come down a 90-degree angle. So something is wrong. You have to tweak the variables in your trading. So whatever it is, so you know better. So you need to tweak your variables and fix it so your equity is rising on a consistent basis at a 30-degree angle, maybe 45, maybe 25, but not flat. If it's flat, it is still okay, because break even trades are winner trades. So, but it shouldn't be at parabolic. Parabolic, it comes down to. So we do have a swing. Before I go into the charts, we do have swing trading. You can go to mytradegenie.com or go to financialmarketswizard.com. We provide real-time trade alert, a specific buy price. So every email goes with the specific buy price right there. It's valid. It's not like 1 hour ago it was valid and now it's not valid. So I'm watching the trade right there, and I provide targets. Sometimes I provide 3 targets. Sometimes I provide range, stops. And I do post on the Facebook chart. Facebook, I post the charts on Facebook, and through emails or through webinar. I do like I'm doing right now, educate you. And then I have a coaching program for 9 months. If you're interested, let me know, send me email. And I provide 82-page trading system guidebook. So when you sign up, you get this. It explains what I'm doing and the rules to follow, so you can manage the trade. Anyway, and there are no shortage of profitable trade ideas. So if you have been with me, you know, at least I send 1 trade a day, sometimes 2, 3 if they are really good. So, and then I don't send more, because then the capital's tied up, and it depends on the market conditions. So I do all the homework, and I have an assistant who helps me. A smooth and rising equity curve, that's the objective. Um, and so, and when you take the trade, when you're taking a trade and you attend the weekly webinar, or if you are a coaching student, then you can learn it all along. So 9 months of trading alerts, you see. And I also send email with the other stock setup, and I tell them that look at these stocks. Do they sound familiar? So tell me, because I just taught that concept, so they know that. So I send the email, and there's a private Facebook group where I post the charts. So just to build your confidence and improve your technical analysis and make you an independent trader. These are some of the testimonials. I don't need to go. These are our home runs from the previous. I need to update the list because I'm using this presentation. I haven't used it for 4 or 5 months. And these winners is not updated yet. I have more winners. So these are the little older winners. So if you receive my email, you get that list. Again, some testimonials. So the trial, before I go to the chart, I just want to let you know, the trial is for $27 for 2 weeks. So if you haven't taken it, you can take it. Just send us email, or you can receive email tomorrow. So just look for your inbox in spam folders and all that. Gmail have 4 or 5 folders. So you look for my email there. You will find the PayPal link, $27 for 2 weeks. And then after that is $147. Regular is $157. If you really need to sign today, send me email. I'll shut down my computer after 10 minutes of this presentation is over. I can send you the link, because there is an 82-page guidebook which you can read tonight. And if you're interested in coaching, then 90-minute session, we talk for 90 minutes, and then I explain to you about the coaching program. So send me email at askus@financialmarketwizard.com or askgenie@mytradegenie.com, or just send email, find noshitrader@gmail.com. Anyway, so next webinar will be on February 17, and let me open the next slide or presentation. So just a second, let me show you the charts now. So I close this presentation and I open another one, which is what happened. Yeah, here. All right, so I'll explain some charts to you. And I hope you see this. Okay, you see that? Okay. So let me go down a little bit. Okay, so there are many techniques I use. So some of the techniques are a trend line basis. So what I'm saying, yeah. So some of them are trend analysis. So the trend line plays a role just like support and resistance, you figure it out, support and resistance based on your techniques, other techniques. The trend lines tells you the support and resistance also, and it works. So, for example, this AABA, Alta Ba, Ba, Alta Ba. So it behaves like Baba. So if I look at the support and resistance could be based on the previous swing lows, swing highs, or some pattern, or it could be moving average, or this trend line. So if you look at this horizontal line, it tells you, or it tells me at least, that maybe this one is at support. So what I do is I just keep this. If once I find it out, I'll put it on my watch list, and then I look for the move. So if the move comes, I know that the 67 level is the support based on the previous move here, and it's right sitting at right to 200-day moving average. So 200-day moving average is also kind of support for me, and the support is 67 right here. So the resistance became support, and I will just time my entry if I see the move up crossing above this red candle. So that's would be my entry. I would know the stop is right here. All right. So this is just a setup. Now, whether it triggers on Monday or Tuesday or Wednesday, I just stock it. So my stocking begins tomorrow. Another one, AAP. So let me see, I did not prepare. Okay, so AAP, this chart is made on 7th of February, so on Thursday. I don't know what it did on 8th of February, so you can look at it. But on 7th of February, it was on my stocking list. So the stock goes on the stocking list first. If I have not taken the trade, or if it came, then I put it on the watch list, because I don't want to move. The best trade comes when you stop the trade and it triggers based on your setting. So now I see this. So this is a downward sloping trend line identifying the resistance level. And this is another downward sloping line identifying the support level. So I know this is a support right here also at 151. And I know that based on this trend line, because every time the stock touches to the trend line and it falls, it touches and it falls, but it does not mean that it will keep doing that. Nobody says that the stock will keep doing it forever. So there will be a time when it will break, and maybe the time is coming now. So if that time is here, I better catch it and make some money for myself and for members. So I just put it on the watch list. I don't know what it did on Friday, so I have no idea right now. I don't want to open the chart. So if it crosses above 163 and I feel that, okay, it will not come down below, I would take the trade. So that would be my trigger. Now look at this AMBA. So AMBA is hit this downward sloping resistance line right at 39 level. And if I draw the line here, I find the support at 37.50. So between 37.50 and 39.40, AMBA is trapped. So what it will do next, I don't know what it will do next. It's sitting at 50-day moving average. So I don't know what it will do, right? Nobody knows. You don't know, I don't know. Only AMBA knows what it will do on Monday. So if AMBA moves above, then I have a clear-cut risk below 50-day moving average. And if it goes up, then it can go all the way, I don't know, maybe 5400, 200. Nobody knows where it will go. If it doesn't want to go, I know it can go to 44. There is a gap here, right here at 48 to be filled. It can go maybe 48, fill the gap. And if it wants to go above, it can go above. So nobody can stop. So we don't know what it will do, right? But we know that if it starts moving, it can go up. And if it starts falling, then I get out. And 50-day moving average is my support. And there's a support underneath the support, which is this upward sloping trend line. So this stock comes on my watch list. So it's just on a stock list. And I will watch tomorrow. So that's the first step to have a watch list. Now this one, Amgen. So Amgen came on the radar because of this hammer. So if you see this hammer, and if I draw this line, so Amgen cross a dip below and then close above. And it looks like it wants to go up. The trend is setting up uh, to the upside. And the support, if I draw, I didn't draw the horizontal line, I can draw the horizontal line at 178 level. So if I draw the horizontal line at 178 level, there is a clear cut support right here. Based on, look at the move right here at 178. Previously, it moved up like crazy all the way to 202. So from 178, it went to 202, 203. So if it has done in the past, it can do that again. So what's the chance of breaking below 180 level right here? There is a chance, but what's the chance of going up? Is also there is a chance of going up, and it looks like it wants to go up, especially based on the Friday's candle. This is a bullish candle. So my art, I'm stacking my art to the upside and put it on the watch list. This AVGO Broadcom. So again, when the stock closes above some resistance line and then pulls back to that resistance line and holds that resistance line, so it becomes support. So there is the, what is it called, polarity change. So the support become resistance, resistance becomes support. So this happens all the time, and we need to know what's happening. So now, based on this, it looks like the resistance has turned into support, and the support is at 265 level. And on Friday, it did move up. So this is a bullish candle. So anytime the stock moves from the support to the upside with the bullish move, bullish like the AVGO candle, it tells me that the support is there. And same thing for resistance level. So we, if you look at this right here at 255, we bought the puts based on just these three candles. We bought the puts and we sold somewhere here. So we made very good money on the puts just based on failing to cross the resistance. So there's no indicator on my chart. You see any indicator? There's no indicator. There's no indicator. So just this, based on that, it was failing to cross the resistance, and then I caught this this on this bar, and then sold somewhere here, calls. So now AVGO is going up. So I think I have, I don't know which, if I have shares or not. So what I do, I initiate with little positions. So let's say I want to buy, this is a high price stock. So let's say I want to buy 200 shares. So I'll just initiate with 50 shares. And then when it tells me, I can keep adding units after unit. So each unit, 50 shares, another 80 shares, so like that. So I keep adding till I exhaust my quota for that stock based on the dollar amount, not the shares. This is the BABA. So BABA and AABA both are, so they move in together. So if you look at this chart, so AABA chart right here, and then so I flip sometime from AABA to BABA, BABA to AABA, just to see what the other is doing. So look at this BABA. So BABA fell now on, what is it, on Friday. It seemed it wants to go up, but I wasn't sure. So I said, okay, I'll wait for another day, Monday. And I already have other positions open, so I'm not in a rush to open any other. And Monday, Friday, the market was kind of iffy in the morning. So I closed a lot of my positions trading. I closed a lot of positions, and I opened few more. So I have a buying power for Monday. So I said, okay, I'll wait for Monday. So next move will tell me what the Baba will do. So I just put it on my watch list. Same thing here, DAC. So DAC is giving, it's called a spinning top. So a spinning top doesn't mean that a spinning top doesn't mean that it's topping out. A spinning top is just a name. So it can be at the bottom or it can be at the top. So this candle, just pure on based on the candles I'm telling you. So this deck fell, right? And then this candle give me a clue. Okay, it may want to go up. Then on the side, it's just putting on the spinning top. It can crash. Deck can crash and come down. But if it starts moving with the volume, then I would go long. And the reason I want to go long is look at this volume here, and it gapped up. So probably it was earning. So it gapped up and now it pulled back and is doing its consolidation thing on the sideway move. So if it starts moving up, the new buyers come, that's when I will get in. Otherwise, just ignore it. And the stop would be below the low of this wick right here, just above 135. So if I'm wrong right here. And if I'm right all the way to the upside. This EA chart. So the the gaming stocks fell on this day, which is Wednesday. So a lot of gaming stock fell. So EA was another one which fell. So this is the example of a gap trading. So the stock gaps down, and then you need to know whether to buy puts or leave it alone or go long. What you need to do. Sometimes you don't do anything, just put it on the watch list. So EA was on my watch list on this gap down, and then other gaming stocks also fell. So when one stock is falling in one category, then you have to evaluate also the same stock, other stocks in the same category. So you say, oh, what the other stocks are doing in the group? Are they all falling? Oh yeah, all falling. Okay, bad. So this industry group is bad now, or is it just an exception? But so all of them were falling. So I looked at it and I said, okay, I'm going to put it on my watch list. Then on Thursday, it started doing this. So we went long, bought the option for $404.30. So $430 per contract. And then on Friday, it did this. So I don't know the reason why it did this. I only know, so I don't need to know the reason. I still don't know the reason why EA did that, because all I knew was that I just closed my positions. My members closed the positions, made money because swing trading. So all I knew was that it gapped down, and if I go long here, my risk is right here. So I'm willing to lose whatever. So I bought $430 per contract, and if I'm wrong, I would lose maybe $130 per contract. But then in the pre-market on Friday, it was up $2-3, and then as soon as the market is open, and it started just move. So I took the profit right here um, because of this big move. So I just took my profit in the swing trading. So it depends on the objective. So if you have your portfolio with the position trading, you will be holding this trade. If you are swing trading, you may be holding it, you may be closing it because of the profit, 500 plus contract. So I took the profit. So my point is, the stock gaps down, don't leave it alone and see next day what it does. If it does just a little bit of this, it's worth taking the risk, because your risk is this right here. So as soon as you define your risk, and so you can take the trade. So your objective is to develop low risk ideas in trading. So you when you see the setup, you say, is it a low risk or is it a high risk trade? So you have to clearly um, come up with the answer, yes or no. So if it says yes, okay. Have you seen this kind of trade before? Yes, I have seen it. Are you feeling good? Yes, I'm feeling good. Can you clarify in your brain? Can you define the internal map image where the stock is going? Yes, I can clearly define it. So you ready to go? Yes, I'm ready to go. Boom. Said, you know your dollar amount. You are supposed to commit, and you buy the contract or buy the shares, and then leave the rest to God. So this is the grub chart. So again, this one is a gap down, up move. I did not take the trade. I just watched it. Sometimes I just watch it. Although I know that this trade will make money, but I don't take it because I need to be disciplined in the sense that what is my risk? how much I'm exposed in the market, what is my buying power left, all my trades are working or not working. If some are not working, maybe I can close that, because I'm very good in taking losses. You need to be very good in taking losses. You need to love to take loss. So, okay, close this position, it's not working. Maybe I take graph. Maybe the market condition is bad. Okay, I leave it alone. Or maybe the move has already occurred. So I'm already late. So I just ignore it, although I know that it will go up. So this is what happened is gap down reversal. It's a strong move, and then it moved up further. So if I had taken the trade, I would have made money on Friday, simply, by pushing the button. But I did not push the button. So Eli Lilly. So now here is another trade. So these are all um, same thing going on. It's not magic. So it's just same thing. So Eli Lilly. So if you look at this resistance line, right? So the resistance polarity change. So resistance becomes support, support becomes resistance. So right now the resistance is a resistance. So it can become cross and become a support. So the reason I think that it will break the resistance is because of that candle. Look at this candle. So just think like this, there is a big wall and you go limping, you want to break the wall. If you just walk to the wall, you will not be breaking it. But if you keep running 200, 300 meter and then jump on it, kick it, and then come back, then kick it, eventually the wall will fall. So it depends what kind of kicking you're doing to the wall. It is by force or just punching it and trying to break the wall. So it seems, if you look at the volume, it seems that the Eli Lilly uh, wants to break the wall. I used to do consulting for Eli Lilly. Used to go in Bend, Illinois, out of nowhere. So just saying. So Eli Lilly wants to break the resistance. So if it doesn't break the resistance, so where is the support? So the next question comes, where is the support? Is there a support under the support? So the answer comes that the support is 115, 50-day moving average. It works as a support. Another answer comes in the form of this trend line that there is another support right here. So there is a support under the support. The candle is moving with the force and looks like Eli Lilly wants to go up. So I better go long. So I went long on Eli Lilly. Now, Lululemon. So Lululemon's is not a lemon. It's I keep it on my radar all the time. So I've been watching Lululemon from right here. So it has been from this level. So we traded before somewhere here. So I've been watching. I said, okay, what it will do. Lululemon is doing. So it just did this. So every day I watch it. It's on my watch list, and I see red bar, red bar. I don't see any signal, any signal. Then it just moved up right here. So when it moved up, by the time I realized, I saw, and I said, oh, it's already sitting at the resistance. So let's see what it does next. So is it crossing? But it did not cross, it pulled back. So this is a shooting star candle, which is a bearish in nature. But so it's just a bearish in nature, but it doesn't mean that the stock will crash. The stock will crash when it wants to crash, but it's just telling you that there's a resistance here. There were sellers sitting at 150 level and they sold it. So for last 2 days, the Lululemon is trying to break this resistance. So it's on my stock list. So right now it's on my stock list. And if I feel good on Monday, I'll pull the trigger, or on Tuesday. If it not, then I just leave it alone. So yeah, I can pull the trigger just right here at the cross of this. And if I'm right, I'm right. It can go up. It can go to 165. If I'm wrong, I close out right here. Microsoft. So Microsoft is sitting at the moving average. There are two moving averages. So it's double support. 50-day moving average, 200-day moving average. So it's just sitting there, bullish candle. So I put it on my watch list. I said, okay, on Monday I will watch and see what it does. If it starts moving, I take the trade. If it doesn't do anything, I don't take the trade. If it breaks 200-day moving average, then it's not good. I wouldn't take. And if I take it, and if it breaks 200-day moving average, then I exit, because it's a 200-day moving average. So below 200 moving average is bearish, above is la la land, and above 50-day moving average is bullish. So this one is between 50-day and 200, so it's okay. It's right there. Now, NetEase, so this is a gaming stock company, is also sitting at 200-day and trying to bounce and break the resistance from 50-day and this trend line. So I just put it on my watch list and I say, okay, what it does. If it breaks or starts to move, I take the trade. Otherwise, I just ignore it. ROST, Ross Store. So Ross Store is just consolidating on the top. So I'm just waiting for it to make a move. So I'm just watching every day to see what it does. It hasn't done anything for last 2 weeks, so 3 weeks. So if it starts moving, I take the trade, breaks with the volume. If not, I'm just ignoring it for the time being. Save split line. So airline moved in tandem. So this one came on my radar again. It bounced back from the 50-day moving average and now sitting at resistance. So I'm looking for the break of resistance. If it breaks above the resistance and I take the trade, the stop is in the support is right there, 50-day moving average. So my support is there. The resistance break will trigger. And then on the left side, I need to watch this 65 level just to make sure that it crosses 65 because I know that from 65 it fell. So if it falls from 65, it can fall again. So I just have to be careful and take the trade and see if it's crossing 65. If it's hesitating or the sell-off occurs, then I exit. And I also exit if it breaks this 57.50 level. Now Spotify. So Spot back to back. So this is like a counter attack. So this down move on the earning, I think it was earning, and then it moved up, and then next day it pulled back. But if you look at this, there's a solid support at 130 level, 128, 130 level. The 3 days of continuous move, if I go on the left side, I see there's a support here. So looks like 130 is the support, and I went long. So risk is what? It's below 50-day moving average. So if I'm wrong, I'm wrong. I put it on, I have the trade open right now. Square. So I trade Square. So these are the stocks which move every day. So I don't need to worry about all the other stock doing, not doing. I just have 437 stocks right now. And Square is one of them. So if there's nothing triggers, but I know Square triggers. Okay, Square moves, I need to take the trade, and everybody trading Square. So this one is a bullish candle. You see that? So Square gives the entry signal. So, and where is the risk? The risk is 200-day moving average. So as soon as you see the trade, then you ask your question, where is the risk? Don't ask question how much I'm going to make. Don't get excited. Just ask where is the risk? Oh, there's a risk right there, 69. So if I'm wrong, I would lose how much? Let's say you saw that at 72. So if I'm wrong, I would lose $3 per share. So how many shares I need to buy based on my portfolio size? So you do the calculation, you know how much you're going to lose, $3 per share. How much you going to make? You can make $10, $15, $20. Only Square knows how much you will make, and God knows. Because it can go to 100, it can go to 85. So the point is, as soon as you know your risk, which is $3 per share, then and you enter the position, then comes your management part and your risk management. So, and how many units you will add additional as the trade progresses. So if Square goes above, suppose I need to buy 500 shares. So I buy 100 right here. And if Square goes above 73, 40, 74, I add another one, another 50 shares. So another unit, because the 100 shares I bought is already in break even or at profit. So I move my stop on this. I know I'm not going to lose unless it gaps down big time. So then I add another 50 shares. And then when it starts making move, then I can add another one. And then I just pile up. And when I'm piling up, I piled up a lot of, and I close on Friday, early morning, I close on. So I kept piling up, FISV and Twilio and a lot of stocks from 8th of January and then 18th of January. So 8th of January and 18th January, I started piling, and then I didn't just buy shares in one big lot. Just keep adding, and then reduce, close those positions which are not working, and keep adding to the one which are working. So you just keep adding, and then you keep raising your stops. Every time you buy a new unit, you need to make money on the last unit, break even on the last unit, and previous to that, you need to make money. So the third unit you buy, you are break even on the second unit, and you are in profit on the first unit. When you buy the fourth unit, you are break even on the third unit, you are in profit on the second unit and the first unit. So you just keep doing it. So you keep track of the cost and how much, where is your stock, etc. Or you can put a trailing stock. This one is TSCO, so I went long on TSCO just because break of the resistance. So this candle, this was a bearish candle. This red candle, it was bearish. But bearish doesn't mean that the stock will fall. It's just bearish. It's just saying that I'm bearish. So take a look. So I took a look and I said, okay, you're not bearish anymore. So I'm going long. So I went long on TSCO. TTW, take two. So this is again electronic arts, and this they fall into the same category. So if you remember the EA chart I showed you, it gapped down and then it bounced up. So TTWA also did same thing on 7th of February. I don't know what it did on 8th of February, but I was looking at this also. So when you see one stock in one category, you need to see all the other stock quickly, 4 or 5 stocks, you take a look. If Baba is doing this, what is AAV doing? If suppose Twitter is doing this, what Facebook is doing. So look at other stocks. If American Airline is doing, then what United Airline is doing. Oh, this is what it did. So I got lucky on EA, right? Because I did not take TTW, I took EA, and EA made a blockbuster move, and this one did not. So it all depends. At that time, I must be looking at something, and I ignored TTWO, and I took EA. Otherwise, I would be crying. Now, Twilio. So I went long on Twilio just because of this. So there's nothing, no magic. There's no indicator right here. So I saw this bouncing from the rising trend line, and I said, okay, I need to go buy some Twilio. So I trade Twilio. This is also the one of the stock which moves just based on this candle. I went long on Twilio because it's bouncing from the resistance line. So if you look at the raise, when the resistance becomes support and support becomes resistance, then the polarity change, and then you need to take action. UNH is on my radar just because it's sitting at 50-day moving average. Nothing fancy here, just support 50-day moving average, and then I'll just watch it and see what it does. That's it for today. I have a $27 trial. If you are interested, keep an eye, email tomorrow, or you can send tomorrow email within 5 minutes if you can. I'll send you the link. And I have a 90-minute strategy session on coaching. So it's a 9-month program. It used to be 6, now it's 9 months because I keep adding materials, and it goes for 9 months, and there's a lot goes in this 9-month coaching program, a lot. So if you're interested, let me know. There is a cost to attend this 90-minute strategy session, so it's not free. And thank you for coming. Oh, how many people left already? 6 people left already, and I'm not done. That's good. So I'm not done. There's more. So here's the chart of the market. So I just want to show you. So that's what happened when you put an ad, like a little ad slide. Okay, I have a $27 trial, and then people say, okay, he's talking about, and then I leave. So then I start teaching more. So I'm glad you are here. 6 people left, but others aren't here. So this is a chart of Dow Jones. So I'm just showing you what it's doing. So this is the 4th of February chart. And then it crossed the resistance line on 5th of February. So I'm just showing you the move. And then it just did nothing on 6th of February. Then it fell down on 200-day moving average. So now, 200-day moving average is the support. So I say to myself, what it will do next. So that's why when it was breaking 200, I closed some positions. But then when it bounced back up, I added a new position. So now what will tell me that the market has resumed its uptrend? It needs to cross this Thursday's candle high. So when it crosses this Thursday candle high, the trend has resumed to the upside. So that's my trigger. Same thing for SPX. So XPX on 4th of February crossed the resistance line, then moved up on 5th of February, sitting just below 200-day moving average. And then it fell back on 8th of February, Friday. But if you look at the candle, is uh, market recovered at the end of the day. So now the confirmation will come when it closes above the Thursday's high, or Thursday's high. When it goes above Thursday's high, then it's continuation of the uptrend, and 2,800 would be the target. Because why 2,800? Because that's where the market fell. So right here, it fell one time, two times, and then three times. So something which takes three times attempt and then it breaks. So a lot of selling program can trigger again at 2,800 level. But there's always a but. There could be a fake move. So either sell off or it could be fake. So you need to be prepared. There's another 95-point move and the market can sell off. So you just be aware of it. So all you need to do is be aware of it. Like when you go for a walk, you're aware there's a tree there, there's a house, there's a car coming. So just like this, you're aware that 2,800 is a resistance level and I need to be aware of it. NASDAQ is doing the same thing, 4th February, 5th of February, sitting under 200 day, then sitting on the 200 day on 6th February. Then it fell on Friday. But again, the same pattern. So again, it needs to go above the Thursday high, and probably it will next week, and then it will go up. So where is the resistance? The resistance is at 7,200 level. So when it goes 7,200, so there are 300 points left. So in NASDAQ 100, so you need to be aware of that 7,200 is the resistance level, but it doesn't mean the market will fall. It can continue go up. It has been going up since here 6,000 level, so already moved 1,000 points in a V shape. Same thing with Russell. So Russell, you see it's sitting there moving on the sideway, and then it fell on the resistance level. So where is the resistance for Russell? So Russell resistance you can see at 1550. So if you look back, 1550 is the major resistance because that's where it fell a lot. It can fall again. Then there is a slight resistance at 1575, right? And then it can go up. So we need to watch 1550. So we know 1550. Then we know 1575. We also know 200-day moving average at 1587, 1588. So this is the map you can create in your brain or whatever, that this is where the market is going, and trade accordingly, manage the trade. You don't need to worry every day, 24 hours, what the market will do tomorrow. Don't need to worry. If otherwise, don't trade. Just what this will do, what that will do. No, just see and then act tomorrow. So that's it. Again, 90-minute trading session, study session, and next webinar will be on 17. If it's not, then you will not receive the reminders. Otherwise, it's on 17th of February, which is Sunday, 5 p.m. And thank you for coming. I'll teach you something else. And have a nice day. Bye.